The global economy is now confronted with serious financial stability challenges from the recent banking sector developments in certain advanced economies. This calls for a reappraisal of the responsibilities of the regulators and the regulated entities world over and their collective role in safeguarding the stability of the financial system. While regulators need to identify potential vulnerabilities and take proactive regulatory and supervisory measures, it is important and incumbent upon the regulated institutions to exercise due diligence in their risk management and corporate governance practices. They need to pay close attention to asset liability mismatches and profile of their deposit base while building up adequate capital buffers and conducting periodic stress tests. It is in this context that we in the Reserve Bank of India have focused on macro and micro-prudential measures in the recent years to prevent build-up of financial vulnerabilities. We have adopted a prudent approach towards regulation and supervision and have taken several steps in these areas in recent years. Some of these regulatory measures are listed in the footnote of this statement. Our supervisory systems have also been strengthened significantly in recent years. We have adopted a unified and harmonized supervisory approach for commercial banks, non-banking financial companies, that is NBFCs, and urban cooperative banks, that is UCBs. The focus is now more on identifying the root cause of vulnerabilities rather than dealing with the symptoms alone. As a result, the Indian banking system remains sound and healthy with strong capital and liquidity buffers, improving asset quality, better provisioning coverage along with improved profitability. Nevertheless, we are keeping a close watch on the banking sector turmoil in some developed countries. In this context, let me once again recall Kautilya's wisdom, which remains relevant even for today's world. And I quote, "In the interests of the prosperity of the country, we should be diligent in foreseeing the possibility of calamities, try to avert them before they arise, overcome those which happen, remove all obstructions to economic activity." I would now like to touch upon liquidity and financial market conditions. The Reserve Bank will continue to adopt a nuanced and agile approach to liquidity management. Amidst large moderation in surplus liquidity, the Reserve Bank conducted 14-day variable rate repo auctions, which is the main operation on February 10th and March 10th, and also a fine-tuning 5-day variable rate repo auction on March 24th. In the period ahead, the Reserve Bank will remain flexible in meeting the productive requirements of the economy through two-way operations as may be necessary. We will also ensure the completion of the government borrowing program in a non-disruptive manner while maintaining orderly market conditions during 2023-24. The Indian rupee has moved in an orderly manner in the calendar year 2022 and continues to be so in the current year, that is 2023 also. This is reflective of the strength of the domestic macroeconomic fundamentals and the resilience of the Indian economy to global spillovers. We remain watchful and focused on maintaining the stability of the Indian rupee.